companies has to spend a minimum of 2 to 3% of their income. And then when it comes to the public sector companies wherein their profits are less than 100 crores, then at the time they have to contribute minimum of 3% from such minimum of 3% from their profits. 1 second, I'm just sharing. Okay. So here we are. You can see on the screen now. So these are the various guidelines that has been issued. So, and if at all that company is a sick or loss-making company, then it is exempted from applying these guidelines or these conditions. So basically, we are going to spend for the CSR activities only whenever we are going to have profit. Then coming to the next one. So another one that has been passed, that is the Companies Bill 2012. So it has made it mandate that any company with a net worth of 500 crores or a turnover of more than 1000 crores, or at least if they are going to make a net profit of minimum 5 crores, then at the time they have to compulsorily follow the corporate social responsibility and they have to spend it, and then they have to draft a corporate social responsibility committee also. And in that committee, they shall have at least one independent director. That is also mandatory. And along with the other 3 or more directors, one independent director is a must. So the main responsibilities of this committee are going to be, first thing is they have to see that they are going to formulate all the guidelines issued by the government and then see to it that this board is going to implement what all corporate social responsibility policies are prevailing that are being undertaken by the company. So they have to monitor the basic functionality of the company, and then they have to check whether the company is following the CSR guidelines as well as it is spending for the CSR activities also. Then next, it has to recommend the amount to be spent on these activities. So the committee has to inform the management how much amount should be spent on these corporate social responsibility activities from the side of the company. So these are the main functions of this committee that has been scheduled. And then various other responsibilities and the activities from this bill have been given below. So these are the main insights of this bill. So first thing they wanted to do is, like, they thought of eradicating the extreme hunger and poverty that is existing in our country. So if the companies come forward and if they are going to spend from the profits and if they indulge in these kinds of an activities wherein they are going to provide some food or some shelter or anything else, then probably these problems would be solved. So that is the main intention of them. And then promotion of the education. So if education is there, then only our economy can grow. So that is also a part of their initiative. Then next one is ensuring environmental sustainability. So definitely we have to save our environment for the future generations. So we have to maintain the sustainability of the environment. And then last one is enhancing vocational skills. So we have to improvise our vocational skills so that more employability can be generated, and then contribution to the Prime Minister National Relief Fund. So these also should be done so that in case of any disasters or any contingencies, the economy can utilize from the fund. So when in our country, in the entire world actually, this COVID pandemic has an outbreak, at the time the Ministry of Corporate Affairs have notified that all the companies have to compulsorily indulge themselves in the CSR activities and they have to spend certain amount as a part of promotion of the healthcare and see to it that it is going to manage with the crisis. So at the time it was mandatory for all, and almost if any of you are working, you might be knowing that even from the salaries also they have cut some amount for us, for all of us, isn't it? So this, then moving to the next one. Now coming to the next topic, accountability in corporate governance. So basically, what do you mean by accountability is taking the responsibility. So if the companies are going to be accountable, if they are going to take the responsibility, like whatever they are going to do, that should be for the welfare of the economy. And if they are having that insights or that mindset, then only the CSR activities can be completed. So many of the companies, they do not take this responsibility, or they do not have this accountability. So because of which many companies are not full-fledgedly involving themselves in the CSR activities also. And then one more problem with the companies are, as we discussed in the yesterday's class, many of the companies are mainly focusing upon just maximization of the profit, but they are forgetting what is their duty towards the society. So the examples that they have listed are some of the recent incidents. One is the gas leakage from LG polymers at Visakhapatnam. So during the time of COVID, this incident has happened in AP. So because that the company has been closed for so many months, this tragedy has happened, and so many people have lost their lives, and then lot of trouble they have faced. Nearby people also, they have faced a lot of problems. So even Bhopal gas tragedy also, that's also one more example wherein the companies are not taking the responsibility, and had been they are cautious, and had been they are taking the responsibility of their enterprises, then these kinds of things may not be turning out in the society. So that's why they have made an emphasis on accountability. So all the companies should be accountable. So because they have an obligation to be fulfilled towards the individual or towards the society, all the companies whoever are running in the society, they should take up the responsibility, and they have to feel that they are answerable to the stakeholders or to the society also. If they are taking the responsibility, then only we can progress, as well as there will be so many problems that could be solved. So now coming to the importance of accountability. So as I said, whenever the companies are going to take the accountability, then only they will think from the side of the society, and whatever decisions they are going to take, that would be at most good decisions, and then they would be profitable for the company, and as well they will be giving some kind of a welfare to the society also. So accountability and responsibility should go hand in hand, and because there is a separation of ownership and management in the enterprises, so probably many people do not take the accountability, but still the companies should be emphasized upon, and they should be made responsible or accountable for the activities they are indulged in. Then moving to the next one, accounts and financial reporting. So the main problem that we encounter with the companies are how much profits they are actually receiving, how much finances they are rising, then how they are spending these amounts. All these details are not full-fledgedly given. So when they are going for the financial reporting, at the time many of the companies do the window dressing, and then they do not give, or they do not publish the entire information related to the organization. So financially, what is the actual status of the organization? If that is not being given to the stakeholders, then every time they will be in a question mark, and then what is the actual status of the company? Nobody would be able to analyze. So that's why they have made it a mandate, like whenever you are going to publish your information, then definitely all your accounts should be audited by the auditor, and then the financial reporting is a must. So all the disclosures that are related to the financial information, how the company is performing, what is the actual financial position of the organization, and what it is doing with the funds, how it is procuring the funds, how many loans have been taken, all the entire financial information should be disclosed to the stakeholders. So whether and in case of, if it is a listed company, then definitely the financial reporting should be quarterly and annually also. So frequently we have to give our financial information. And then um, so basically, if the companies are going to report the financial information to the stakeholders will be in a position to know what is the accurate position of the company, and then they will be able to assess the key performance indicators also. So in your material, they have given financial KPIs. So what are the key performance indicators of your enterprise and how well they are performing, and what is the overall health of the company financially? That also they will be able to assess if the financial reporting is being given. So when we are saying financial reporting, so basically in the financial reporting, it compulsory involves the following things. So all these statements are a part of the financial reporting. So first thing is, when the company is going to issue its financial statements, the financial statements term itself will include the following statements. So that is, first one is the income statement, the other one is the balance sheet, and the statement of cash flow. So these three statements are mandatory, and all these three statements come clubbed together will only be called as the financial statements. So all the companies should have to issue these to the stakeholders. Then apart from this, it should accompany with the footnote disclosures also. That means if certain transactions are not being able to listed out in the above statements, so certain things you are not able to fit, and then we do not know exactly where we have to disclose that particular one, then at that time it should be additionally given as a footnote at the end of our financial statements. You have to disclose that. Either you write the heading and give the description, or at least in the form of a note, what is the thing that has happened and why you are not able to disclose them in the above statements. That description at least should be given. And then any other financial information that need to be disclosed, that also should be included in the financial statements, and that should be available on the website also. The next, every time the annual reports should be issued to the shareholders. And next one is any prospectus issued to the potential investors when you are going to raise any securities and all, then also that information should be provided. So all this financial reporting should be compulsorily given by all the companies, whether it is a private undertaking or public undertaking. Definitely all this financial reporting should be completed. Then only we can say that the financial reports are being generated from the side of the company. So this is the mandatory financial statements. Now, next, moving ahead, objectives of financial reporting. So what is the main intention of going for this financial reporting? So the International Accounting Standard Board, it says like, when the companies are going to issue the financial reporting, or when it is going to generate the financial report, at the time, the stakeholders will be in a position to know what is the actual financial position of the company, then how it is performing, and what are the changes that are happening in the financial position of the enterprise. So last year, if probably the company's turnover is 100 crores, now it has come to only say 75 crores. So why the performance, or why there is a change in the financial position? What are the factors that are paving towards this downfall of the company? So all this they would be able to analyze only if the company is issuing the financial report. So when they are going to publish the financial report, what are the main purposes for going for this reporting? So see, the first one, the first main intention is the company has to provide information to the management. So when the management is planning, or it want to take any other policies, or when it has to take any decisions, without knowing the major information related to the organization, it cannot take up any tasks. That's why initially, first and the foremost thing is we have to provide information to the management. Then next one is we have to provide, that is the company has to provide the information to all the stakeholders. So there we have the investors, promoters, debt providers, creditors. So all of them will be interested in knowing the financial position of the company. So it is the company's duty that they have to provide the information to them, because all these people are connected with the company, and they are the people who are actually helping the company to generate the finances also. The next one is provide the information to the shareholders. So as per the law, shareholders are the actual owners of the organization, and it is the right of them that they have to get the information related to the company. Then next one is, when we are providing the information related to the company, we have to provide the information related to the utilization of the economic resources also. So how we are dealing with our liabilities, how are we raising the finances, how are we utilizing the resources. So all this information should also be given. And next one is how the organization is actually procuring the various resources. So what all resources it is actually getting and how it is spending on these resources, that also should be given. Then next one is information to the various stakeholders regarding the performance. So what is the performance of the company? Is it improving day by day? Is the share values increasing? Is the company's goodwill increasing? So how is the overall performance and the financial health of the organization? That also should be informed to the stakeholders. The next one is, it has to provide information to the statutory auditors. To the auditors also the company has to provide, because they have to go through the financial information and then they have to generate the report. So it is very much important for them to know the information. And then to enhance the social welfare, for that purpose also, it is very much necessary that what is the actual status of the company, that should be known by all the people. So these are the various objectives. Now, next, importance of financial reporting. So in what way the financial reporting is actually helping the companies? So, how is it actually helping? So first thing is, whenever one company is actually issuing any financial information, we will be able to know whether the company is complying with various statutes or various regulatory requirements, whether it is fulfilling all the governmental requirements or not, that we will be able to know. And then we will be able to know the actual status of the company also, because in case, as I said, if it is going to be a listed company, it has to definitely go for the quarterly information. So every 3 months we are able to get an update on the working of the companies, also on the working of the organization, so that we can assess and we can know whether in future we want to be connected with the organization or not. Also that decision also can be taken by the stakeholders. So for that purpose it is definitely important. Then next one is, it facilitates statutory audit. So as I said, if the auditors are being appointed, so that they actually check the financial information and then they are going to generate the audit report. So if they do not know what is actually happening in the organization, they will not be able to generate the report. And if the report is not generated, then neither the shareholders nor the creditors are going to be connected with the organization. So it is very much important that you have to disclose the financial information. And then the financial reports are treated as a backbone for the financial planning, because if you know how much profits you are receiving or whether the company is in the losses, then only we will be able to take up any plan or action for the future. So for us to plan or for us to make any analysis or to take any decision, the financial reporting is very much necessary. Then next one, this reporting will help the companies to raise the capital both from the domestic side as well as from the international markets also. We will be able to mobilize. Then next one is, the entire public will be interested in knowing the financial performance of the company, because almost all of us are going to be connected with one or the other company. So if we know what is the performance of the company and what is the kind of goods and services that the company is going to produce and related to the shares, then it would be in the inside of the public welfare also. So in that view also, the company has to provide the financial information. And for the last one is, for the purposes of bidding, or if they are going to be entering into any kinds of a labor contract, or they are going for any kind of government supplies and all, then at that time also financial reporting is must, because all these people will go through the financial status of the company, how it is performing, and then only they would like to be either connected or disconnected with the organization. So financial reporting is must. Now moving ahead, IFRS and accountability. So I think all of you are aware of accounting standards. Like for our country, we are going to follow the accounting standards specified by ICAI, isn't it? So we have the accounting standards board, and then for almost all the transactions that are going to be there, separate standards have been developed. And then in our financial reporting, when we are actually taking up any transaction or anything, then at that time we follow the accounting standard. And in that accounting standard, what is the treatment that has been listed? Same, we take that as a base, and then we draft our financial statements, isn't it? So in the same way, accounting standards, it is Indian accounting standards is for our country. So in the same way, when we are indulged in any international businesses, at the time we have to follow our Indian accounting standards, as well as we have to see the IFRS also. So the IFRS is International Financial Reporting Standards. So we have to meet the expectations of the IFRS, and then we have to report the same in our financial statements, because we are indulged in an international trade. So that is the importance of IFRS. So now, because there are so many companies which has been set up, and every time there are so many transactions that are going to happen. So to harmonize all of them and to see to it that all the companies are reporting in the same manner, these standards has been prescribed. So all the companies will follow the accounting standards and see to it that whatever has been listed in the standard, that is being implemented in their organizations. So this has been made a mandatory by the Ministry of External Affairs and SEBI. So this is Ministry of Exports Affairs, sorry. So they are going to monitor whether the companies are going to adopt the accounting standards. And as I said, if they are indulged in any international businesses, then they have to adopt the IFRS also. So almost all the companies have developed these accounting standards, and all of them are implementing their own accounting standards. And as I said, whenever they are going for any international, then at that time we have to follow this IFRS. And even International Accounting Standards Board is also there, so which is going to look after that all the things are going to be covered, and it has given the various norms or standards, like how you have to take up the things. So I just hope like all of you are having an idea of accounting standards. So preparation of IFRS. So one more thing before going to this IFRS. So initially when we are preparing our financial statements, at the time we generally follow GAAP, isn't it? So this is the generally accepted accounting principles. So if we make a comparison, like how we are writing our balance sheet and how we are writing our P&L in our country, if you make a comparison with the other country also, they are also drafting in the same manner. And likewise, if you make a comparison with so many other countries or other companies, almost all of them are going to follow the similar kind of a treatment. So why the similar kind of treatment has come is because of the generally accepted accounting principles. So to bring all these financial statements on par with all the countries, we have implemented so many things. So in our country, we follow Indian accounting standards, which has been given by ICAI. And when we are going for international trade, at the time we follow IASB, so that is International Accounting Standards. And then we are going to implement International Financial Reporting Standards also. So when you are dealing with the other countries, what all standards you have to meet, that is being given in the IFRS. So all these are being standardized, and all these are being incorporated, and all the companies has to very much follow all these statements. So the very first International Accounting Standard 1, it has set the overall requirements, like what all things should be necessary. And when one company is going to present its financial statement, then what is the minimum requirement for the company? What all definitely it has to present in its financial statements. So if I am a company, then by the end of the financial year, what all compulsorily I have to publish. So that is IAS 1. So see here, the minimum requirement. So first thing is the company has to provide a statement of financial position at the end of the year. So what is the actual financial position of the company? That should be intimated. Then next one is the statement of P&L. So obviously we will be able to know whether the company is in a profitable position or not from the P&L statement. And then changes in equity, how your equity is changing. Originally, when you have set up your organization, how much was the equity, and by the end of 2 years or 3 years, whether your equity has increased or decreased. That changes in the equity statement also we definitely require. And then cash flow statements, that is also one more mandatory statement which need to be published by the organizations. So as per our Indian, yes, it is cash flow is 7, isn't it? So how you are having your cash flow statements. So if you might be aware, like in our cash flow statements, again, we have to show the various activities also, operating activities, investing activities, and financing activities. So how much you are able to raise the finances and how the cash is flowing in or flowing out. That means how much amount your company is receiving and how much amount, how much cash is flowing out of your organization. So all that analysis that would be there in the cash flow statements only. So that is also one more compulsory statement that need to be issued by the organizations. The last one is any explanatory note. Like if there is some missing information or something has happened and somewhere you are not able to put the transaction in a proper manner, then why such disturbance has happened in the financial statement, that explanatory note should also be given in the financial statements. So these are the mandatory ones which all the companies has to publish by the end of the year. Apart from the annual report and all, these are the mandatory statements. So now, so till now, the IASB, so that is the International Accounting Standards Board, they have formulated 17 IFRS and they have come up with the 41 international standards covering the diverse subjects. So what all methods and what all procedures need to be followed under that accounting standards, all of them has been clear-cutly defined. So almost all the companies are going to follow these accounting standards. I hope all of you are having a knowledge related to that. If you take the depreciation, we have an accounting standard. If you take the leases, we have an accounting standard. If you take the contingent liabilities or goodwill or anything. So how in the organization that particular aspect it should be taken and what all disclosures related to that need to be done in your financial statements, that is given in the accounting standards. Now, next one, implementation of IFRS. Sorry. Okay. Now, implementation of IFRS. So, as I said, IASB has taken up the responsibility of saying to it that almost all the companies are going to implement IFRS whenever they are indulged in any kind of an international trade. And then mainly the main things that need to be checked by all the companies with respect to this is, first one is differences in native standards and IFRS. So as I said, every country will have their own accounting standard. So as I said, for our country, ICAI has given accounting standards and we have accounting standards board. So we follow that particular accounting standards which has been given by our country. Likewise, if you take up UK or any other country, they will have their own accounting standards board and they have their own accounting standards that is being set up. So when in my country, when I am following the accounting standard and when you are following your accounting standard, there could be some kind of a differences or discrepancies, isn't it? So at the time, these differences may lead to some sort of a confusion also. So that's why to solve these problems of these differences and all, this IFRS has been set up, and then they have seen to it that it is almost harmonized. So similar kinds of practices have been developed by almost all the countries so that there will be less differences. The next one is accounting education and training. So this is one more aspect which they have looked upon. So if maximum number of companies are going to have the accounting education, then only probably the implementation of all these IFRS or accounting standards will be more easy. So that's why they wanted to have more education or more awareness related to this. Then next one is tax laws dealing with the profits or losses. So in one country, what are the actual kinds of legislative systems that are going to be existing, and how these legal authorities are going to deal with the aspects that are related to the profits or losses. So when we are having any losses, we can set off that loss also, isn't it? So how can that legislations be taking place? That is also be given. So that is with respect to the set off and carry forward of losses. Then next one is valuation issues arising at the time of acquisition and merges. So when we are going to acquire or merge with another country, what all kinds of issues we are going to face and how we have to deal with that. So because we have various methods of acquiring, so we can acquire it by shares, we can acquire it by assets. So at the time when we are going to follow any of these processes, then there could be some likely problems that we are going to face. So that's why these valuation issues also should be solved. And then last one is stock valuation and share price movements. So share price movements, that would be obviously looked upon by the share markets. And then fluctuations are, every time we have so many fluctuations in the share prices. And then stock valuation, how we are valuing our stock. So in your costing, you would have studied, we have various methods of average stock method. So which method you are going to take up and what kind of valuation system you are going to follow. So all these are the various issues that has been taken up. Now moving to the next one, methods to ensure accountability. So this unit is more of making a mandate of all the corporates to take up the responsibility. So how far we can see to it that the organizations are going to be accountable for their activities. So for making them accountable, what all methods we are actually using in our Indian context. So the first thing is preparation and sharing of financial information. So if we are imposing on the corporates, that definitely they have to prepare the financial statements and then share the financial information with the stakeholders, then probably we are completing half of the task, because once the actual information of the company is known by the stakeholders and the shareholders, they themselves will be involved in taking up certain decisions, and then even though if the company is deviating from its path, probably it could be corrected also. Then next one is auditor's report. So as you all are aware, like by the end of the term, the auditor has to come, he has to check the financial statements and then he has to generate the report. Based upon the report only, we will get the other inputs from the government and the shareholders. Then director's responsibility report. So this is also one more report that comes from the side of the directors. The next, it is annual general meeting. So definitely the company has to take up the AGMs and then they have to call the shareholders and inform them all the various decisions that the company is taking, and then how the company is progressing also, that should be discussed in this AGM. Then clause 49, so already we have discussed, I think 2-3 days back. So clause 49 is with respect to the appointment of independent auditors and then executive directors and non-executive directors. So in one company, how they should be and what all they have to follow, what all guidelines they have to follow, that is being given in clause 49 of the listing agreements by the SEBI. Then next one is non-mandatory disclosures. So what could be the non-mandatory disclosures are? So these are not actually compulsory. It is voluntarily. So they say, so first one is customers and suppliers meet. That is one thing which they can disclose. Exhibitions conducted by the organization, and then social audit. So social audit is nothing but how the company is taking up the responsibility towards the society. That will be given in the social audit. Then now again, this is also a kind of a repetition. Just now we have seen, no. So what all are the mandatory financial statements for one company? So again, they have listed. So when we say financial statements, so the following are included. So whenever we are saying that the company has to publish the financial statements, that means first thing is it should publish its balance sheet, then P&L or income and expenditure, then cash flow statements, changes in equity, and explanatory notes. So these are the mandatory financial statements. If all these statements are published, then only we can say that we have published our financial statements. So you have to remember this. This is important. Then apart from that, how the company is going to appoint its first auditor, how much will be their tenure, whether they are going to be repeated, all that also need to be given, that information need to be given. And then what will be their qualifications, what are their disqualifications are also discussed as per the Companies Act, because the auditors are going to have a major role in letting the financial information known to the others. So if they are preparing a correct report, then only it will be useful for the society and even for the stakeholders also. So Satyam scam, you might be knowing. So under the Satyam scam, that's what has happened. No, it was the fault of the this auditors. They had been window dressing. So that's why it's such a big company has collapsed. So auditors are having a major role to be played in the organizations. So that has been emphasized upon. So whenever the auditor is going to generate any report, at the time, definitely the audit report should be unbiased, and then the report should be always true and fair. So if they are not uh, acting in the interest of the stakeholders, and if they are not taking the responsibility, then on this auditors, there could be criminal liability case also. So that's why the auditor has to be highly responsible when they are going to draft these financial statements and issue the report. Then next, moving ahead, the other point which has been discussed under the Companies Act is with respect to the board of directors. So how the board of directors should be, what all standards they have to follow, and then when the board of directors are taking any decisions, at the time they have to select the accounting policies also. So they need to know the company's information, they have to maintain the records properly, and then they have to see to it that they are working in the interest of the organization. Then next one, any information is there with respect to the organization, all that the company's information should be definitely shared in the AGM or any other meetings. If they are going to conduct, definitely they have to share the information to the stakeholders. Hmm. Then next one. So here we got the clause 49 again. So in the earlier class also we have discussed this clause 49. So see here, in the clause 49 of the listing agreements, what all are the main highlights or what all has been included under this? So first one is the composition of the board of directors. So how many directors your board should consist of and what kind of people they have to be there. Then next one is constitution of audit committee. So constitution of audit committee is, we have studied reports, isn't it? I think in the day before yesterday's class or yesterday's class, we have studied various committees. So wherein we have covered the audit committee also. Audit committee, remuneration committee, we have studied. So as an audit committee, when you are constituting the audit committee, what all responsibilities the audit committee is going to have, and then how one independent director should be. Then proper submission of audit reports. Then disclosure requirements as per SEBI. So as per SEBI, whether the company is disclosing all the material facts or not should also be checked. Then whistleblower policy. So the other day also I said whistleblower is basically the person who is identifying any fraud in the organization and letting others know that something has happened, some fraud or malpractice is happening in the organization. So basically, the person whoever is finding out that and then letting it known to the others, that person is called as a whistleblower. So basically, if some company is indulged in a serious fraud and one person is identifying, then there could be a threat to that person. So the company may harm him, the management may harm him. So that's why they have come up with the whistleblower policy. That means whoever is the whistleblower, what all protection is being given to that whistleblower. So that is being covered under the whistleblower policy. The next one is proper disclosure of the activities of the subsidiary company. So if you are the main company and under you are having a subsidiary company also, then all the activities of the subsidiary company should also be disclosed. Then next one, disclosure of related and third party transactions. So if the company is having any related party, then what all disclosures need to be done to the related party and the third party transactions, that is also given. And the last one is the risk management policy. So how your company is taking up any risk management, what all provisions it is maintaining, so that in case of any losses, the company is ready with some kind of a strategy. So all these are being given. Then next one, financial reporting and stakeholders influence. So if the company is going to publish the financial information, then on the stakeholders, what kind of impact can be there? So as we have discussed in the first or the second class, stakeholders means all the people who are connected with the organization in one or the other manner. So all the stakeholders has been given here. So you can see one by one. So first one is the employees. So how the financial information can have an impact on the employees? So that is being given. So first thing is, in each and every organization, trade unions will be a part. So when the trade unions know about the financial information, then at that time, if the company is making higher profits, but that company is not sharing with the employees, then the trade unions can ask the company to share the profits to increase their salaries or wages. So like that, the financial information will be useful for the trade unions. Then next one is co-determination of the employee representation. So as I said, whenever the employees know about the financial information, then the company employees can ask the board of directors to give them some kind of a benefit. So some kind of a perks or anything can be enhanced, or if they know what is the situation that is going to happen, they will be able to face that situation also. Like in case of layoffs and all also, they will be prepared. So that's why they should be knowing the financial information of the organization. Then next one, profit sharing. So as I said, if the company is making maximum profits, but if it is not sharing with the employees, then the employees can ask the company to share the profits in the interest of the employees. So this they can ask only when they know about the information. The next one is equity sharing. So the company can give the employees an option to buy the company's shares. So like that, the employees can become the owners of the organization also. So that also the company can start. And the last one is the team production solution. So whenever the company knows like what is the present situation, so in that situation, if the company wants to get any solution for that, then also the employees would be able to help the organization. So it in the interest of all the people, all the stakeholders, the companies should definitely give the financial information to all the connected parties. So all the connected parties clubbed together, we call them as the stakeholders. Now coming to the customers. So why the customers should be knowing the financial information? So because if the customers know how the company is performing, then only they will be able to judge like whether the company is providing them with the quality goods or services or not. So that is the foremost requirement of all the customers, that they have a clear cut idea of the company. they should know about the company's products as well as the financial position also. So what all could be helpful for them? So first thing is detailed legal records if they are able to know related to the company. So in case the company has sold them any products, but then it is denying from taking the product liability, like it is not giving the after sales services, or if it is not fulfilling the requirements of the warranty, because because the company is financially stable, the customers can go legally also against the company, and then they can ask for the proper they can ask for the proper proceedings of the organization. Then next one is any problems that are related to any noise or odor or any other nuisances that are coming from the side of the organization, that also they can ask the organizations. So all this they can take up only when they know the information related to the company. And then last one is if the company is not going to publish the entire information, and then the company is hiding any information related to the product, and if it is going to use any product which is harmful for them, then also the customers can go legally against the company. So for that purpose also they have to compulsorily know what is the financial information of the organization. Then next, coming to the institutional investors. So basically when we say institutional investors, institutional investors are basically the people who are going to invest in the organization from the side of the organizations. So those are called as the institutional investors, isn't it? So we have four types of institutional investors in our country. So the first one is financial institutions. So various financial institutions like IFCI, IDBI, and SFCs, all those come under the category of institutional investors. They would be interested in knowing the company's financial position because they are a part of the either they are part of the investment or they are going to provide credit to the organization. So they have a right to know what is the financial information related to the company because the company has taken finances from them. Then next one is LIC and GIC. And next, third category includes all the banks, and then fourth category includes all the mutual funds. So these are the various institutional investors in our country. So what are they actually expecting from the companies are, first one is financial results and solvency. So why are they expecting this financial results and solvency is basically, as I said, they have given finances to the company, and if the company is financially solvent, then only the company will be repaying them back. So that's why they will be interested in knowing the financial results. Then next one is whether the company is implementing the gap principles or not, that also they will check, because if they have to finance any loans, then definitely the companies should be meeting with certain legal requirements and certain procedures. So when the company is fulfilling these requirements, then after they go through, then only they can advance the loans. So that's why they would like to know the financial statements and check whether the company is fulfilling all the legal obligations or not. Then next one is whenever they are willing to provide any kind of an either information or they are going to provide any kind of a service to the organization, then definitely they have to know the financial health of the organization, so that if they are coming up with any schemes or any communication also, that could be smoothly done. Then next one, as I said, like whenever these institutional investors want to advance any loans, at the time, definitely they have to see to it that this company is fulfilling certain legal requirements. Then only they can advance the loans. So that's why they have to see whether the company is practicing good corporate governance, then it is including the auditing, and then it is fulfilling the disclosure and transparency requirements. Then next one, they will be interested in knowing the corporate image also. So what is the company's brand power or the goodwill that is there in the market? Based upon that also, they would be interested in providing loan to them. And the last factor is going to be the share prices. So how the company's shares are going to be there. So that also they will be interested in knowing. So because of all these factors, the institutional investors would be interested in knowing the financial information. Then next one, creditors. So obviously creditors play an important role for a company. If creditors are there, then only one organization will be able to raise the finances, isn't it? So what will be the expectations of the creditors? So first thing is creditors would like to know the information because they want to know what is the credit worthiness of the company. So how, whether the company is financially viable and whether the company will be able to pay them back. So that they would like to know. And then next one is they would like to know about the higher margin of profit. So whether the company is receiving higher margin of profits, then they would be able to ask the company to pay the higher interest charges. And then in the company, if there are any non-performing assets, that also they would be interested in knowing, because from that asset, the company is not getting any returns. So how many non-performing assets are there? That also they would like to know. And the last one is they would like to get an information on the legal framework and effective procedures for the debt collection. So how they will be able to get their money back. Then next one, for the community. So how the community or the society will be expecting. So first thing is the community or the society would be interested in knowing whether the company is fulfilling all the human resource principles or not. So how far it is taking up those principles and how far it is maintaining all those principles, that they would be interested. And then next, they would like to check whether it is going to provide the transparency in the accounting and financial standards. And next one is whether the companies are following good ethics or not. And then how it is taking up the issues related to the environment, that also they would be interested. Next one is whether the companies are having a passion to serve the customers. So at the time when you are willing to serve the customers, then at that time, what kind of products or services are coming from the side of the company and what they are promising and whether they are fulfilling the same or not, that also will be checked. And then whether they are providing fair treatment of the suppliers and competitors. And then lastly, if the companies are going to work with more of ethics and then corporate governance, then only we can have an economic standard and it can help us in getting a better society also. So these are the people who will be interested in knowing the facts of the organization. So next one is social responsibility and accountability. So social responsibility is the companies taking up the responsibility towards the society. So as I said in the other class also, responsibility and accountability go side by side. So if the companies are taking the responsibility, then we can say that they are accountable also. So what all issues are created with that, we will see. So first thing is protecting and promoting the stakeholders or the interests of the employees. So first thing, the company has to see to it that it is going to protect all the stakeholders and the shareholders. Then next one is it has to see to it that it is going to help the society with the common welfare programs. I'm sorry, it is 7 o'clock. No, I will end here. I will continue from here tomorrow. And just end with the class.